Welcome to another video. The world of cryptocurrency has captured the imagination of many in recent years, with headlines filled with stories of people making substantial profits or suffering significant losses. As a beginner, navigating this complex and evolving landscape with the proper knowledge and tools at your disposal is essential. In this video, we will break down the world of cryptocurrency into critical areas, each crucial for anyone looking to get started. Let's get started with the video. Cryptocurrency for Beginners, a comprehensive guide. What is cryptocurrency? To embark on your cryptocurrency journey, you must first grasp the core concepts underpinning digital currencies. In this section, we will delve deep into the nature of cryptocurrency, shedding light on its distinctive features and elucidating how it sets itself apart from traditional fiat currencies. Our exploration will encompass the bedrock of blockchain technology, the mechanics of decentralized networks, and the inherent purpose of digital currencies in reshaping the financial landscape. The history of cryptocurrency. Delving into the history of cryptocurrency will provide you with valuable context. From the inception of Bitcoin in 2009 to the various altcoins and significant developments, this section will help you appreciate how far the industry has come. In this expanded video, we will take a deep dive into cryptocurrency's fascinating and ever-evolving history, spanning from the birth of Bitcoin to the present day, covering over a decade of innovation and disruption. The genesis of Bitcoin's birth and the white paper begins in the turbulent times of 2008, just as the global financial crisis wreaked havoc on traditional economic systems. In October of that year, an enigmatic individual, our group using Satoshi Nakamoto's pseudonym, released the Bitcoin white paper titled Bitcoin, a peer-to-peer electronic cash system. This groundbreaking document outlined a revolutionary concept of a decentralized digital currency operated on blockchain technology. It directly responded to the shortcomings of traditional financial systems and banks, offering a vision of economic freedom and independence. The birth of Bitcoin was on January 3, 2009, marked the Genesis block of Bitcoin, where Nakamoto mined the first 50 Bitcoins. This momentous event is often referred to as Block Zero, and represents the inception of the world's first cryptocurrency. Bitcoin was designed to have a fixed supply of 21 million coins, making it inherently deflationary. Unlike traditional fiat currencies that can be printed without limit, this characteristic added to its appeal and allure. The early growth and adoption of Bitcoin, in the early days, was mostly confined to the obscure corners of the internet, and used by a small group of tech-savvy enthusiasts and cypherpunks. It gained its first real-world value in May 2010, when a programmer named Laszlo Hanich made history by purchasing 2 pizzas for 10,000 bitcoins. This event is now celebrated as Bitcoin Pizza Day and represents one of the earliest real-world cryptocurrency transactions. Altcoins and the expanding universe are now embracing the world of cryptocurrency. As the potential of blockchain technology became more evident, developers and innovators began to experiment with their cryptocurrency creations, leading to the birth of alternative coins, commonly referred to as altcoins. Litecoin, created by Charlie Lee in 2011, was among the first notable altcoins, offering variations in technology and speed. The subsequent years saw an explosion in the number of altcoins, each aiming to address specific issues or offer unique features. Ethereum, developed by Vitalik Buterin in 2015, was a game-changer in the space. It introduced the concept of smart contracts, allowing for the creation of decentralized types of cryptocurrency. Cryptocurrency is not a one-size-fits-all concept. This section will introduce you to the various types of cryptocurrencies, from Bitcoin and Ethereum to altcoins and stablecoins, explaining their unique characteristics and use cases. Bitcoin is often referred to as BTC. Bitcoin, often called the original cryptocurrency, was introduced by the pseudonymous Satoshi Nakamoto in 2009. It operates on a decentralized blockchain and utilizes a proof-of-work consensus mechanism. Bitcoin's primary function is to serve as a digital store of value and a medium of exchange. Altcoins, a portmanteau of alternative coins, encompass many cryptocurrencies beyond Bitcoin. These digital assets aim to offer unique features or improvements over Bitcoin. Stablecoins are designed to provide price stability and are often pegged to a stable asset, such as a fiat currency. They serve as a bridge between the volatile world of cryptocurrencies and traditional financial systems. Privacy coins focuses on enhancing user anonymity and transaction privacy. These cryptocurrencies employ various technologies to obscure transaction details, making it challenging to trace them back to individuals. Tokens are digital assets built on existing blockchain platforms, such as Ethereum, Binance Smart Chain, or Cardano. They serve various purposes and can represent ownership of assets, access to specific services, or participation in decentralized governance. Besides the major categories mentioned above, niche and specialized cryptocurrencies are tailored to specific industries and use cases. For instance, cryptocurrencies are designed for supply chain management, healthcare, gaming, and even energy trading. These digital assets aim to address specific needs within their respective sectors. On that note, let us guide you on how to buy cryptocurrency. If you're interested in getting involved in the cryptocurrency market, you'll need to know how to buy digital assets. We'll guide you through the process, including choosing a reputable exchange, creating an account, and making your first purchase. Storing your cryptocurrency is of vital importance. Once you have cryptocurrencies, you need a safe place to store them. We'll discuss different wallet options, such as hardware, software, and paper wallets, and help you understand the importance of security and private keys. Now, let us talk about some of the unique characteristics of the cryptocurrency market. 24/7 market is unlike traditional stock markets that operate during specific hours. The cryptocurrency market works around the clock, 7 days a week. This continuous trading cycle allows for greater flexibility but can also lead to increased price fluctuations. High volatility is one of crypto's known characters. Cryptocurrencies are notorious for their price volatility. Prices can experience rapid and significant fluctuations in a short period, creating both opportunities and risks for traders. Cryptocurrency is global and it is also decentralized. The cryptocurrency market is global and decentralized, not tied to any specific location or institution. Traders from all over the world participate in this market, and no central authority oversees it. Cryptocurrency has various diverse asset types. The market offers various cryptocurrencies, each with its characteristics, use cases, and price behavior. Bitcoin and Ethereum are just two of the many options available for trading. Here is some vital information regarding cryptocurrency trading strategies. Successful cryptocurrency trading involves well-thought-out strategies tailored to your risk tolerance and investment goals. Here are some common trading strategies. Number 1. Day trading. Day traders open and close positions on the same day. They seek to capitalize on short-term price fluctuations and avoid overnight exposure to market risks. Number 2. Swing trading. Swing traders aim to profit from price swings over a more extended period, typically holding positions for several days or weeks. They rely on technical and fundamental analysis to identify potential entry and exit points. Number 3. Scalping. Scalpers make numerous small daily trades, aiming to profit from minor price movements. This strategy requires a deep understanding of technical analysis and lightning fast execution. Number 4. Hodling. HODL is a popular term in the cryptocurrency community, referring to a strategy of holding assets for a long time. HODLers believe in the long-term potential of their chosen cryptocurrencies and are less concerned with short-term price fluctuations. Number 5. Arbitrage. Arbitrage involves exploiting price differences for the same asset on different exchanges. Traders buy the help on the business where it is cheaper and sell it on the conversation where it commands a higher price, making a profit from the price differential. Please note risk management is crucial for cryptocurrency investment. Cryptocurrency trading carries inherent risks, and effective risk management is crucial for long-term success. Here are critical aspects of risk management in cryptocurrency trading. 1. Position sizing. Determine how much capital to allocate to each trade. It's generally recommended to risk only a small percentage of your trading capital on a single transaction, typically 1–2%. 2. Stop-loss orders. Implement stop-loss orders to limit potential losses. A stop-loss order automatically sells your position if the price reaches a specified level, preventing further casualties. 3. Take profit orders. Take profit orders allow you to lock in profits by automatically selling a position when it reaches a predefined target price. 4. Diversification. Avoid putting all your capital into a single asset. Diversifying your portfolio across multiple cryptocurrencies can help spread risk. 5. Emotional discipline. Emotions can cloud judgment and lead to impulsive decisions. Maintain emotional discipline and stick to your trading plan. 6. Stay informed. Continuously educate yourself about the market, as knowledge is critical to risk management. 7. Security. Protect your trading accounts and assets using secure and reputable exchanges. Enabling two-factor authentication, 2FA, and employing best practices for securing your private keys. Crypto's regulation and legal considerations. Cryptocurrency regulations vary by country, and staying compliant with the law is crucial. We'll explore the legal aspects of cryptocurrencies, tax implications, and what to be aware of when dealing with regulators. Crypto security and scams. The cryptocurrency world is rife with security threats and scams. To protect your investments, you need to know how to recognize and avoid common scams, employ best security practices, and understand the risks associated with the space. Crypto's future trends and developments. The cryptocurrency landscape is continually evolving, with new technologies and trends emerging. We'll discuss topics like decentralized finance, DeFi, non-fungible tokens, NFTs, and the potential impact of central bank digital currencies, CBDCs, on the future of digital finance. Crypto's tips for success. To conclude our guide, we'll provide essential tips and advice for success in cryptocurrency. These insights will help you make informed decisions, manage risk, and grow your investment portfolio. As a beginner in cryptocurrency, it's essential to start with a solid foundation of knowledge. This video has covered critical aspects, from understanding cryptocurrency to navigating trading, security, and future trends. With this information, you can confidently enter the exciting and often unpredictable world of digital currencies, making informed decisions and minimizing the risks associated with this rapidly evolving field. For more videos, like and subscribe to our channel. Thanks for watching the video.